So the second financial statement that we'll look at is the income statement. If you're in the United States, you might see this as the profit and loss statement. Or you might see it by a few other names, but so long as you recognize that it's revenue less expenses equals net income, we're all talking about the same thing. So let's look at each of those parts in turn. Revenue is going to be simply what you take into the business. This will usually be synonymous with sales. So if I go back to our cat cafe for a moment, every time I sell coffee, that's revenue. Every time someone pays for a reservation to hang out with my cats, that is going to be revenue. When you have revenue from sales, that's usually what we hear as top line sales. So when they say, what's your top line? They're saying, hey, from your widgets, from your product or service that you're actually selling, what is the money that's coming in from that? You also, of course, have other ways that you can make money. So revenue could come from things like, I own the land where I do my business and I'm going to sell that land as a one-time revenue source. So that sale of an asset could be revenue. You might have investment income where I've parked my money into something that produces revenue. All of those are also collected up into revenue. But the most common way to think about revenue is sales. The next piece is expenses. And expenses is a little bit more complex. It's actually best thought of as taking an asset, consuming that asset to generate revenue. What do I mean by that? So let's say I want to market my cat cafe. I want to tell the world that I have the cutest cats and the best coffee. So I'm going to do an aggressive social media campaign. I'm going to do tons of buys in newspapers and maybe on TV. I have a lot of expenses. We call those selling expenses, things like administration, marketing. To be able to have money for that, I take my asset, which was cash, which we saw on the balance sheet, and then I'm consuming it. I'm eating it up little by little by little by little. And all of that is the expense now. It's the consumption of the asset towards the generation of revenue. And what I called selling expenses are the ones we think of most often, such as marketing or payroll. But you also have, of course, cost of goods sold. And that's all of the different materials and labor and so on that goes into actually making your product or service. And those combine such that revenues less expenses is going to be equal to your net income, how much you have left over. And remember now that this is a video. So our balance sheet was a snapshot. This is a video over a certain period. So usually every quarter or every year, over that period, it'll show you how much net income you have. After you minus out your expenses, how much money do you have left over?